Good afternoon, everybody. Welcome back to Cilinix Crypto. I hope you're all doing great, and welcome to this new video about the bull market. All right, I quickly wanted to make a video, first of all, talking a little bit about whether we are still in a bull market, and whether we can still expect this bull market to continue, because I think at the moment we are still in a bull market. But at this point of time, a lot of different opinions and a lot of different voices are going up about whether we are very close to the top. Will it still continue for a couple of months? Will it still continue for a year? A lot of people have different opinions, and if you're watching this video, you probably have one as well. There's no right or wrong here, all right? It's almost impossible to really figure out whether we are actually still going to get more bull market or not. In my opinion, to do a short conclusion, because that is not one of the main topics I wanted to talk about, or at least not what I wanted to focus on in this video, I do still think that we are going to get more bull market. How long? I am not certain, at least a couple more months. But that I'll also keep you updated on in my daily updates. The one thing that I wanted to focus on in this video is one of the main catalysts that can actually start one of those bull markets, all right? Or at least the next leg of the bull market. And that has to do with a concept that's relatively, like for a lot of you, this might seem difficult to grasp and difficult to follow. So that's why I wanted to make a video on that. And that is, in general, it has to do with the dollar strength index, all right, which is the strength of the dollar against other currencies. And historically, this has always been an amazing predictor of bullish market circumstances. And then especially, or at least if we look back into time, especially the last two bull markets and altcoin seasons. If you take a look at this, for example, so this is the strength of the dollar, all right, and its price. And what you can see is that the last time this actually went into a downtrend, or at least the last two bull markets, this actually went into a downtrend, and then when it started to trend up again, the bull market started to fade. This was the last bull market, as you can see, 2020 up until like the beginning of 2022, downtrend. And then the one before that, as you can see, 2017, and then it ended in 2018, trended down. It ended when this started trending up again. And what we have seen so far is a bearish dollar strength index here and there. I mean, for example, the first time we actually had some bullish momentum again after the bear market was the beginning of 2023. That was also when the dollar strength index was bearish. Back then you could actually, like it was nothing compared to the price of Bitcoin right now, but there actually was quite a lot of bullish momentum again for the first time after the FTX crash, which was right here. And now what you can see is that the dollar strength index has been massively bullish. And what that means is that, well, if every time, or at least the last two times that we got a real bull market and an altcoin season, the dollar strength index is or was bearish, then that means that the moment this turns bearish, and this is getting towards very, very strong resistance levels, as you can see right here, we at least have a very good chance of actually getting more bullish momentum in the markets, all right? Now, I'm not going to pretend that it's going to be the same as the last bull market or the one before that. Market caps were smaller, and I don't think we'll see the same returns. But this is one of the main things I do think you need to keep an eye on, and to actually know that when this turns bearish, there's going to be plenty of buy opportunities in the markets. All right, so this is the dollar strength index. Now, the main thing that, and the abbreviation is DXY, by the way, also called the Dixie. But one of the main things you can actually do to keep an eye on this and to actually gain an idea of when this will start to fall or when this will reverse, because at this point of time it's definitely bullish. I will leave the links down in the description, but that's economic data. All right, so if you go to my FX book, which is going to be one of the links that I'll leave down below, you can follow this economic data, and basically what you're looking for is, and this is going to sound weird, but it's bad economic data. All right, so it's lower than expected. You can see the previous data. You can see the previous data, the consensus data, and the actual data. What we're looking for is data that's worse than the expectation. And I know that sounds weird, but what we want is rate cuts, all right? And we're only going to get rate cuts, which you can track with the other link right here, what the expectations are for Federal Reserve interest rate cuts for every Federal Reserve interest rate meeting, as you can see right here. But it's going to be either cut, or it's going to be paused, or it's going to be hiked, which would be very bearish, based on this economic data. all right? And if the economic data is bad, so that's what we're looking for. So for example, that the existing home sales are worse than expected, or that the new home sales are worse than expected, or that we have more initial claims than expected. If that happens, what we will see is that the US economy is starting to suffer a bit more, and that is when they'll do rate cuts, and that's good for the markets, and that's bad for the dollar strength index. All right, so that way, if you actually follow these events, and if you then combine that with the expectations for specific rate cuts or rate pauses that you can see through the CME group link down in the description, you can actually track what's most likely, and if these odds, if these probabilities change. And what you're looking for is a as low as possible target rate, which you can see right here. So for example, for March, right now the probability is 28% that we'll get one rate cut, I believe. So if we actually get bad economic data and the probability for this goes up, that's going to be bearish for the dollar strength index and bullish for crypto. And that is it's perhaps one of the things that most traders do not look at, but this is one of the best indications of actually when to buy crypto and when to expect more bullish momentum. So like I said, I will place links down in the description. There you can also find my Telegram and Discord group. This might be a little bit difficult to grasp. So if you still have any questions, whatever, let me know down in the comments, or at least let me know in the Telegram and the Discord group, because the comments are absolutely filled with bots nowadays. Let me know that in those. You can add me whenever you want, and then I'll make sure to respond. But for now, I think that's what you need to know. One of the most useful tips I think you can get in crypto right now is to actually dive into this, do some research, keep an eye on it every week, and you'll be prepared for the next time you have to buy. But those are my thoughts. That's what I think you need to know. Like I said, all the links you will need will be down in the description, so check it out. For now, thank you for watching. Take care and bye.